Good evening, everyone. This is Rajendran here, joining from Market Calls, and welcome everyone to Beginners Guide to Market Profile. So, in today's session, we are going to get to the basics of market profile. We are going to learn some of the market profile terminologies, and we are also going to learn how you can use market profile to trade from an intraday perspective or from a very short term perspective, how we can make use of those market profile and what are the information that we can gather from market profile. That is what we are going to discuss in today's session. So before getting into the session, just give me a quick confirmation about the audio and video quality so that we can quickly kickstart with the session here. Yeah, thank you guys. Thanks for the confirmation. So I hope I'm loud and clear. So let's quickly kickstart with the session. My name is Rajendran. I'm the founder of Market Calls, and I've been trading these markets since 2006 onwards. So far, I had closely written 3,200 plus articles on various topics, and most of my expertise is on market profile, order flow analytics, building trading systems, and building automated trading platforms. So primarily, I use NinjaTrader 8 for order flow and market profile based studies. And especially for AMI broker, I prefer to use systematic trading kind of procedures. So what I've been off late doing here is kind of a fusion between systematic trading and discretionary trading, which I've been practicing in Nifty and Bank Nifty uh, instruments, mostly on futures and options. So off late, back in 2012, right, I was exploring market profile. That is some 8, 9 years back. I started exploring market profile. By that time, I was not that serious about market profile. You can say that, but slowly, I was started learning market profile, and at some point of time, I have to take market profile and order flow as a serious profession. Because what I learned from the market profile is that market profile will not give you buy and sell. It will not tell you where to enter, where to exit. Then you can ask, what is then why I should go and use the market profile, right? So it doesn't tell you enter and exit. Then why you should go and use that tool, right? But let me tell you, it will give you the ground reality of the markets. Probably you would have seen that cricket match, right? Every time before the cricket match is about to start, the pitch report will be coming in. So, like a pitch report, you will be able to get to know whether it's a batting pitch or a bowling pitch. You'll get to know whether the wind is in the favor of the bowler or not. You will get to know whether it's a pitch which will be favoring the batsman or it is going to favoring the bowlers. Whether reverse swing will be working really good or Yorkers will be working good. So those kind of pre-analysis is what the pitch report is all about. But here, the market profile, it is not a pre-analysis. It is useful for doing pre-analysis. It is useful for doing post-analysis. And more than that, you can do a real-time market analysis using market profile. So basically, it gives you a snapshot of what traders are doing in the markets, what the buyers are doing, what the sellers are doing. Whether buyers are doing a good job in the markets today or whether the sellers are doing a good job in the markets today. Basically, you can track the behavior of the traders. So usually we track the behavior in the term of something called price distribution. When we are looking into the market profile, we not only look into the price, we look into the price distribution. By looking into the price distribution, what you can learn here is that you can try to get to know the other traders' emotions, how other traders are taking emotional trading decisions in the markets, where they are keeping their stop loss, and many things as a crowd, what the market itself trying to do. Now, there are a lot of tiny information we will be collecting from the market profile. Market profile, every now and then will be keep on throwing informations. Lot of information will be keep on throwing. We collect all those informations and we convert those information into something called market context. Okay, what we do, we see the market profile. It is more of a visual tool. It doesn't give entry exits. It doesn't tell you where to enter, where to keep a stop loss, but it helps you to understand the markets much better. Right? Understanding, without understanding the markets, can I go and trade? Of course, you can do that. But what could be the impact? It is like you are entering into the WWF championship without having any qualification. You are entering. What will happen? Easily, the expert will come and eat you away. But if you know that at least you're going to getting into the WWF championship, at least you will get prepared. You will get prepared and the tricks of where to fight, where not to fight, where to keep quiet, where to be aggressive, where you can become lesser aggressive, where you can step away from the markets, where you can walk away from the markets. This is very crucial here because many times when the people are opening their trading screen, somewhere they will try to find a trade over here. But remember, walking away from the trading opportunity is also a trade. That is the best of the best opportunity, but still you don't want to take that opportunity. That is also a trade setup. Okay. And many at times, if you want to become a professional trader, you have to start doing that. For that, market profile will help you to understand, to get a better view about the markets. Basically, what market profile gives you is that it gives you a 360-degree idea about what market itself trying to do. So how many of you are very new to the term market profile? You can just type it out. There is a Q&A section is there. You can go and type it out. Okay, Madhu is new, Jignesh is new, Murthy is new, Prem Shah is new, Vijay Kumar is new, Hem Kumar is new, Rang Pandey is new, Venkat Bhatt is new, Amal is new, Nailesh is new, Subro Sengupta, Nagarjun, Swaroop, Anand Agarwal, Jayesh, Manish and Shyam Prasad, Subhash, Saravanan, Shivam, Kushal, Sridhar, Vinayak. Oh my God, the list is keep on going long and long and long. Looks like 90% of the people who are attending today's session are new. So probably this is one place that you should learn about market profile. See, for buy sell, there are a lot of indicators are there. In fact, I had designed a lot of n number of trading systems over here. That is a completely different game when you are involving with indicators, right? Absolutely, you cannot predict the markets, but you can only capture the trend. You can use indicators as a risk management tool. But if you want to predict what is happening inside the markets, what do you have to do? If you want to predict what skill you want to learn, just think for a moment. Or let me put the question in another way around. Let's say you want to predict whether today it will rain or not. What you will do? What do you have to do? Just write it down in the comments so that we can discuss about that. Let's say today it will rain or not. If you want to understand what you will do. Of course, go outside and see the sky. You'll get to know, right? So basically, you are by looking into the sky, or you might be opening a weather app, or some people they might have an temperature meter in their, thermometer or some sort of measuring the temperature device they might be having in their home. By looking into that, you will get an idea like whether it's that recent Google apps are pretty smart enough to say whether it is windy day or rainy day. It gives a prediction for the next 5 days even. But the best possible thing is like you go outside, you open your window, see it outside and see the sky, and you will get to know that. So that's the same thing we are also going to do with the market profile. When you want to predict what is going to happen, You look into the current market situation rather than looking into the past information. You look into the current information and you try to understand the current situation much better than anybody else, because most of the traders, they are trying to look into the past information and they try to predict the future. But what I'm saying here is that forget the past. Yeah, you can give some weightage to the past, I'm not denying that, but at the same time, more importance, you have to learn to give to the present in markets, present market condition right now. The right now what is happening, it really matters when comes to predicting what is likely to happen from an intraday perspective. So people generally look into the head and shoulders and then they will try to predict, if this head and shoulder happens, this will happen. Triangle pattern happens, this will happen. Pennant pattern happens or flag pattern happens, will happen. That is a different game. Not necessarily it has to work from an intraday perspective. That may be working for investors, or that may be working for some short-term investors or long-term investors. It might be working. But however, doing an intraday trading is completely a different ball game. You have to be very flexible in changing your decisions. Maybe morning you have to go long, afternoon you have to go short, again you have to go long. So constantly you have to keep on changing your opinions. Constantly you should be coming up with an unbiased mindset, because the moment you are a trader, right? No matter what, if it is a long, you have to go long. If it is a short, you have to go short. It doesn't matter what FIs are doing. It doesn't matter to you what DIs are doing. It doesn't matter even what smart money is also doing. Yeah, sometimes it matters, but not necessarily. It has to be a matter to be considered on a daily basis. Because on a daily basis, FIs and DIs will be keep on doing some activity. Am I right or not? On a daily basis, FIs and DIs are doing some activity. Every day we are getting the FIDA figures. So where is the question, like where the smart money is entering? Are the smart money is entering every day? Of course they are entering every day, because they have the business to do on a daily basis. They have to enter, they have to exit on a daily basis. But the real question is that where they are entering. They enter on a daily basis, they exit on a daily basis. But where they are entering. And more than that, are they smart traders from an intraday perspective? Now, let me put you a very simple question here. Let's say Rakesh Jhunjhunwala. Many traders, they agree that he is a smart trader. I also agree to that. But is he, when Rakesh Jhunjhunwala is coming and buying, is he a smart trader from the intraday perspective? That is the question you have to ask. Or let's say I'm a short-term trader. I want to enter for the next 2 or 3 days perspective. So what do you have to imagine? Like what do you have to know about it? Right now, whatever the activity which is happening right now, let's say you're trying to identify the smart trading activity. Are they smart for the next 2 or 3 days? Because only if they're smart for the next 2 3 days, I can go and initiate a trade and then I can benefit from that smart trading move. If you want to know all together, you need to know what is happening right now in the markets. For that, market profile is one of the best tool to look into this such kind of information. Now let's see what is the market profile is all about. Let's get into some of the detailed aspect of that. So probably you would have seen this. You have any idea what is happening around here? Of course, they are flow traders. Back before the computer based trading started, people literally go to the floor. Maybe if you would have seen the recent scam 1992 scam series, right? How many of you have seen that 1992 scam, where Harshad Mehta was starting his job as a jobber, and then he go to the floor in the Bombay Stock Exchange, and then he'll be doing his hand. So they'll be using hand signals to do the buying and selling. If they're showing their palm out, that is selling, and if they are showing their palm and then waving their hands towards their face, that means it is buying. So back in those days, right, people literally know each other. The traders, they know each other. They know whether he is a small trader or big trader by looking itself. By people generally tend to give respect. Small traders, they don't care much. Big traders, a lot of crowd will be around them. So people generally know each other basically, right? So by looking into the people itself, they know that he is a jobber. So he's an intraday trader. Who He's a long-term trader. So this guy, he trades only penny stock. But right now, what happened? Once the market becomes completely electronic, right after 1995 onwards, most of the markets in the world, they totally become computer-based trading. And right now, we open our mobile terminal or computer terminal, and then we'll start trading from there. So basically, what is lost in the game is that people don't know whether we are competing with institutional investors or not. At least back in those floor trading days, right? When bigger investors are coming and buying, let's say JP Morgan is buying or Goldman Sachs is buying, people literally see that a Goldman Sachs is keep on coming and buying there. But right now we lost that opportunity of tracking whether bigger buyers are coming and buying or not. And more than that, we miss those we miss those crowded sentiment which used to happen in the such a crowded place, right? A lot of noise happens in the markets. The noise itself, it's a edge which traders used back in those olden days. Now you open your trading terminal, right? It's been a quiet day, right? So even if the markets are dropping 1,000 points in a day, also you'll be next to your computer, there'll be a pin drop silence will be there. You don't get to know that the traders feelings. You don't know how the traders reacts. Are they taking emotional decisions? We don't know anything about that. That is what market profile intend to teach traders, how other traders think in the markets. Once you know how other traders are thinking in the markets, then you can use those information, you can convert those information into your trading edge. That is where your prediction ability happens in the markets. That is where the predictive ability happens in the markets. And what we've been doing here is that we've been constructing an objective framework on top of market profile, especially for the option traders. That is what we are trying to do in option Hydra course. So the market profile itself, it will give you a 360-degree idea about the market. This is another way of representing, like candlesticks. Market profile is also one another way of representing the market information. So once the market starts, what will happen? The price action will be keep on moving up and down and up and down. So every half an hour, we will be generating letters over here. So that means 9:15 to 9:45, letter A will be generated. So wherever you are seeing the price action, first half an hour price action. So let's say first price opens over here. This letter O represents today's open. So that represents what? Today's open. From the today's open, how the price action is happening. First half an hour price action. Let's say price went down, again went back up in the first half an hour. So this entire price zone, it will be replaced with letter A. So we'll be keep on plotting letter A over here. No matter what, even if it is keep on whipsawing also. So here is the low of the candle. Here's the high of the candle. And this entire length is 30 minutes. So that 30 minutes, letter A would have been plotted over here. Irrespective of however the price action is. We are not bothered about the price action. Okay. We are bothered about initially as a beginner, right? As a beginner, you're very much bothered about how the letters are getting constructed. So 9:15 to 9:45 is where the NSE and BSE market operate. It starts at 9:15. So letter A would have been generated. Now letter B tracks the next subsequent half an hour. That is from 9:45 to 10:15. We will be able to track letter B price action. So that is what letter B price action is all about. Then comes the letter C from 10:15 to 10:45. That is letter C will be generated. and it keeps on going on till letter M. So in a day, right, in case of NSE and BSE, letter A to letter M, that is total 13 letters will be generated. 13 letters. But it creates a very magical pattern most of the days. You know what is the most of the days pattern is all about? More trading activity will be happening at the center. You can see that this particular day, you could see if you count the number of letters which is getting traded, letter A, B, H, I, J, K, L, M. How many letters? 4, 5, 6, 7, 8 letters. 8 letters. Each and every letter we call it as a TPO. TPO means time, price, and volume. Volume is what we call as a opportunity. Opportunity. So T for time, P for price, and O for opportunity. We call that as a TPOs. Each and every letter is called as a TPO. Now, if you could see that center point, 8 TPO is what we are able to get over here. That means 8 times that particular price has been revisited back. Now, let me do one thing. Let me show last Friday's activity. Last Friday's activity was one of the fantastic trading opportunity which happened from an intraday trading perspective. Let me show you. So what I'm going to show you here is that last Friday's activity I'm going to show you over here. This is how the market profile activity you will be able to see here. Every day a profile will be generated. And you can also split this profile. I can right click, I can split this profile. This is as good as you are watching a half an hour price chart. You can even open a half an hour price chart and you can compare it. Let me do one thing. I'll try to open a half an hour time frame chart. So let me click on plus button here. I'm using a Ninja Data 8 platform. And on top of that, I'm using Bell TPO indicator. I'm using Bell TPO Ultimate. So let me pull an 30-minute chart over here. I want to load it for last 45 days. I'm going to set the trading hours as NSE. You know Ninja Data, right? Ninja Data is one of the best tool for implementing graphical studies like market profile or order flow kind of tools. I'll press OK. So what you're going to get here is you're going to get an half an hour time frame charts. So I'll bring this chart towards the right, and on the left hand side I'm going to bring market profile charts so that we can compare side by side. So what I'm going to do here, I'm going to replace this to a new window, and this window I'm going to push it towards left, and this window here I'm going to keep it towards right. Let me use this candle. So this is what the last Friday's activity is all about. And the same thing I'm going to visualize using the market profile. Oops. Let me zoom it over here. So you can zoom X, Y on the X axis also. You can zoom it on the Y axis also. So let me do a proper zooming over here. Okay, so we have a zooming over here. So there are two kinds of profile. You can see it over here. One is a split profile, another one is a regular composite profile. For that particular day, the same price activity will be updating twice. The first one is what we called as a regular profile or composite profile, regular profile. Okay, there is a similar activity. You will be able to see the second one is nothing but the split profile. If I merge everything towards the left, what I'll be getting is a price distribution. So you'll be seeing a price distribution over here, something like this. You'll be able to see some sort of a bell curve shaped distributions. You will be able to see on a daily basis. Even here also, be able to see this kind of bell curve shaped distributions. Now, Imagine here, I'm just bringing that instead of letters, if you see the price action of the candles, instead of this candle, what I'm going to do, I'm going to bring it like a OHLC charts. Okay, I'll make it as a OHLC charts. So the first half an hour of price action is what? Which is nothing but letter A, and this is like letter B. So A, B went down, and letter C, D, E, and F, and G, and H, I, J, K, L, and M. As I said, letter A to letter M is what you'll be able to get on a daily basis. Every letter will be half an hour time frame. Only the last letter M, will be running only from 3:15 to 3:30 p.m. And we are okay with that. So that is generally happen. So you don't need to be very accurate that every day all the bars should be half an hour. You cannot do that, right? So the last bar will be running from 3:15 to 3:30, but that is more than fine, because generally last bar will be like last bar will be running for mostly very slow price action will be there most of the time, and that 15 minutes is more than enough to understand what is happening around those levels. Now you can ask how I can get to know what is happening by looking into the structure, right? What you will be getting is a kind of a profile structure. We call this as a what? Profile structure. So by looking into this profile structure, how I'll get to know the emotions? Of course, there are a couple of practice you have to learn. By following the certain process, you will get to know what is happening around the markets, where the traders are getting tricked. Very often, right, they will be tricked at the previous day low, previous day high. Many traders will get tricked. Many traders in the markets, they follow very simple strategy, like when the previous day low is broken out, go on short. That is how the amateur traders, they go and think in this market. Their thinking is completely different, and it is very predictable also. For example, market profile is one of the best tool to visualize the highs and lows. So here is the previous day high, and this is the previous day low. I just kept two levels over here. Let me also mark those levels as well, so that you have a fair idea what I'm talking over here. It may look silly, but it is not. Previous day high and the previous day low. Okay, so this is previous day high, which is nothing but 17th December high, and likewise 17th December low as well. 17th December low as well. Now imagine letter A, it was dropping, letter B also dropping really hard. But you can ask the question, why the price went up? Did you ever thought like this? Look at the fall of letter A and letter B. Such a crazy move, right? From 13,780 levels, price went down to 13,680 levels, almost 100 points drop. 100 points drop, and why the price went up? Do we have any reasoning behind that? There's a 13,780. There was a straight fall within just 1 hour, right? 1 hour. That means letter A is half an hour, letter B is half an hour. So total letter A and B contributes to total 1 hour of trading. Within that 1 hour of trading, there was a 100 points drop. Then how we can predict that this can happen? Any ideas? Probably if you're thinking, right, you'll be thinking and thinking and thinking. If you don't have an idea about market profile, it will be very difficult to answer why this happens, or what is the reason it should happen over here. So the fundamental reason behind here is that most of the traders, they have the habit of keeping their stop loss around previous day low. They used to keep a stop loss. And some traders, they have a habit of keeping their stop loss around previous day high. Usually, this is what most of the small traders they will be doing, and of course, that is what the smart money will be gunning for, because that is where they will be able to find liquidity. There's something called where they can go and do a lot of business around those levels. They'll be able to trigger the stop loss. By triggering the stops, they will be able to generate volatility in the markets, or sometimes they'll be able to generate momentum. So they can benefit from those volatility, and then they can benefit from those momentum around those levels. Now, let me do one more thing here. Very interesting concept here. What I'm going to do here is I'm going to take a 5-minute chart of last Friday's activity. So this is 30-minute chart. What I'm going to do here is I'm going to even convert this into 5-minute time frame. I'll go to 5-minute time frame. So here is the 5-minute time frame charts. So from the 5-minute time frame chart, what we are able to understand. So this is what we are able to see on last Friday, right? 18th. Of course, one of the day is missing over here. All right, never mind. So let me go back. Maybe I'll bring something like AMI Broker, because at times it will be a helpful tool to understand what is happening in much better way. You can use AMI Broker, or you can use Trading View to understand those kind of concepts. But still, why I'm bringing this is that I want you to understand the price behavior around those levels. Maybe it is a simple thing, but probably very few people pay attention to those kind of levels, and that is a very repeatable pattern also. Very repeatable pattern, and very less people they care about that. That means it is a trading edge, right? So first of all, let me go back to the charts over here. Let me bring a simple price charts. Okay, so here is a simple price chart of Nifty. Okay. 5-minute time frame. Let me look at the previous day low. So this is the previous day low, December 7. This is the first 5-minute candle. The low is around 13,686.9. So I'll double click and I'll note it down. 13,686.9 is the low for the day. And also draw a line as well. So watch very closely how closer the price, when somebody pushed the price towards the day low, candle broken that day low and quickly reversed from those levels. Have you ever noticed this? Have you ever tried to convert this into a trading edge? But you will able to convert this into an edge, especially if you look very closer into the market profile. You'll be able to understand certain things over here. Like one of the things that we focus here is kind of a very simple concept called breakout failure. A simple breakout failure usually breaks those levels and immediately try to reverse from those levels, because the previous day high, previous day low are the reference level used by intraday traders. Many intraday traders in the markets. I'm not talking about small traders. I'm not talking about 1 lot, 2 lot traders. Okay, 1 lot, 2 lot traders, they hardly care about previous day high or previous day low. But there are a lot of intraday traders are there, bigger intraday traders are there. Some of them are from family offices. Even I'm from Bangalore. So in Bangalore, there are a lot of family offices are there. Likewise, there are same bigger offices are there in Mumbai and in Gujarat and in Delhi, right? A lot of regular intraday traders are there in the markets. Their size is quite phenomenal. And those players, they care a lot about previous day high and previous day low. They don't look into the charts. They are aware about fundamentals. They are aware about technicals. But still they care about levels that they can watch from their trading terminals. So what are the levels you can watch from your trading terminals? Imagine, I'm not talking about the modern charting tools. I'm talking about the legacy, very old trading terminals like the Nest Odin kind of trading terminals. What you'll be able to see from your trading terminal? You'll be able to see what is the today's high, today's low. What else you can see from your trading terminal? Let me narrate it down. One is like you'll be able to say today's high. You'll be able to see today's low. Probably previous day high, previous day low, previous day high, previous day low. And what else we can see? Maybe previous day close we can see, previous day close sometimes. And sometimes you'll be able to see what? You'll be able to see today's open also, today's open. So these are the references, majority of the time the traders they use. So who are using these references, right? They are nothing but intraday traders. Intraday traders. So generally these traders, right, they are pushing the price down, and when those levels has been taken out, maybe they'll stop selling. That's how the traders react. They push through the price. When the level is reaching, they will stop trading. Or dumb traders, what they will do when that level is broken, they will try to enter over here. Mostly emotional traders, mostly breakout traders. Many people in the markets are breakout traders. They see a level. When that level is breaking out, they want to enter a trade. Right? They want to enter their trade. That could be based upon some previous swing high. Some people look into previous swing high. Some people look into 1 week high. Some people look into multi-month high. Some people look into previous day high or previous day low. But whoever looking into the previous day high or previous day low, they are mostly what kind of traders they are? Intraday traders. Because imagine if I'm an investor and I'm going to invest in Reliance for the next 10 years. Do you think I will care about where is the previous day high and previous day low, and then I will invest for the next 10 years? Or only if the today's high is broken or previous day high is broken, then only I will come and invest in the markets for next 5 years? Does any institutions like JP Morgan, Goldman Sachs will think like that? Do you think so? Of course not, right? Investors, they will be watching a different game. Traders will be watching a different game over here. Investors' thinking is completely different. They look into the fundamentals. Probably they will look into the value of the stock, or they will be looking into something like a growth stock if they are looking for momentum. So different kind of investors, they will be looking into different parameters. They will be looking into the balance sheet. Some people might be looking into the PE ratio. Some people might be looking into the growth. Some people will be looking into the momentum. Some people will be looking at all-time high, all-time lows. So different traders, different investors, they think differently, but they don't look into previous day high or previous day low. That is not investors' game. They don't pay closer attention to the price. But traders, they pay very close attention to the price. Maybe you may not paid closer attention to price at the previous day high and previous day low. But once you're looking into the market profile, you will start paying closer attention to the previous day high and previous day low, because that's how the traders think. Traders think around the price levels. Suddenly, last week low has been taken out. Traders are aware about that. Traders are aware if 2-day low is cut, every trader, they knows that. Oops, I'm sorry. Just give me a second. Let me fix it up. So suddenly if the price is coming and breaking a certain price level, every trader, they will know that today's low has been taken out. Because it is the same movie that everybody is watching right from the morning 9:15 to 3:30. So you see a head and shoulder, I also see a head and shoulder. You see divergence in your RSI, I also see a divergence in the RSI. Now almost every trader have the same set of charting. Every trader have access to the super trend. Every trader have access to the every trader these days, they're straight away they're coming and starting up with the patterns. Every trader very quickly able to learn what is a head and shoulder, triangle, pennants, all those setups. So how you can differentiate yourself as a trader in terms of skill? If you're running a business, right? Think about that. You're running a business. What do you do? You will try to understand what your competition is doing. That's the same thing that market profile also trying to teach you what other traders are trying to do in the markets. Basically, what your competition is doing in the markets. Without knowing your competition, how you can run a business? Imagine that. That is not going to happen, right? Obviously, you will lost in the game. If you don't know what your competition is doing, you are outdated. Let me tell you, indicators will not help you to understand what competition is doing. But the market profile kind of tools, it will try to give you a fair idea how you should think in the markets and how you should think systematically and how you can convert that into trades. That is what market profile helps you to explore that. See, let me tell you, I'm from the engineering background, right? So I'm more of a math guy. But after learning market profile, I know that this is not math, it is more of an art, like karate or something like drawing. It is art of understanding the markets at a core level, what traders are trying to do, how traders are getting cheated, or where traders repeatedly keep their stop loss levels, and where price can repeatedly go and trade again and again and again. If you see the center point of the day, if you could see here, this is the center point of the day, last Friday. How many times it got traded? 3, 4, 5, 6, 7, 8. Again, 8 times. Think about the previous day. How many times it got traded? 7 times. So if you keep on doing this, you will be finding a pattern over there, right? Every day, the market itself keeps on trading at the center more number of times. That itself a very good market understanding. If you see this, that is a statistical edge that you are going to get from an intraday perspective, right? Let me tell you how you can think from that angle. Think about this zone. How many times it is touching? 1, 2, 3, 4, 5, 6, 7, 8. Almost 8 times again. 8 times. These are 8 times. Then there are many times if you see this market, it will be trading 8 times, 10 times, 12 times, 13 times at a particular price level. And that is a bigger edge from an intraday trading perspective. Again, if you think about this particular day, imagine this particular day, how many letters it got traded. Maybe I'll zoom it a little bit. Maybe if you're watching from the mobile, it might be a little bit tricky over here. But let me zoom it a bit. So now if you could see the number of letters, you try to count the number of letters over here. How many letters got traded on 14th December? How many letters got traded on 14th December? You count it as 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 times the letter got traded. Expect only one letter, all the letter got traded. Expect letter M, right? All the letters, letter A, B, C, D, E, F, G, H, I, J, K, L. All the letters got traded. But did we given any importance to that particular information? That is an interesting thing which is happening. How come a market can trade every half an hour at a particular price level? It is like you're having a line and that line is getting touched every half an hour once. How come it can happen? But it happens. Majority of the time it happens in the markets. Again, this is understanding. If you don't know this understanding, right, you'll be trying to trade the breakouts. But what will happen is that market will be keep on whipsawing around those levels. But if you know this concept, you know that yes, it is part of the game. Probably you will improve your skill from there on. It's a very simple concept that market does this kind of price action. We call this as a rotational price action. There are 2 ways we can call this. Like price is rotating around the center point. We can call that particular day as a rotational day. We call that as a rotational day. It's a type of a day where a particular price keeps on oscillating around those levels. Comes up and goes down and goes down and comes up and goes up and comes down. And it's a highly predictable thing. Not only that, you look into this particular day, 11th December, focus on this price action. How many letters got traded around the center point? 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 letters got traded. Means every half an hour once that particular letter got arrived to that particular letter got traded. Almost 9 times price touched around those levels. Means what? This is the level. If price shoots up from there, again comes to the center point. If again shoots down from here, it comes to the center point. Again goes up, center point. Goes down, center point. Again goes up, center point. Like an oscillation. The center point is what we call as an equilibrium point. The center point is what we call that as an equilibrium point, where more traders like to do more business, especially the wholesale traders. We are retail traders. Likewise, there are wholesale traders are there in the markets. All right. So those wholesale traders, their job is to do what? They buy it in wholesale and they sell it to retail. Who are the retails? The people like you and me are retails. So their business is different. All right. Our business is different. Probably have you heard about the term DMart? DMart, have you heard about that? What DMart's job is all about? DMart. What DMart does? Have you any time went to DMart? Probably you would have heard about DMart, right? At least in the stock markets, if you don't know it's DMart, right? I guess none of the people in the markets, they don't know about, they know about DMart particularly, especially those who are in cities or almost very close to the city side, they will get to know. At least they would have went to DMart at least once in a while. What DMart does is that they do a wholesale business. They acquire everything in a large scale and they sell it to retails. The same thing is what probably you heard about the car dealers. That the same thing, they also do the same thing. What a car dealer will do. Have you any time stepped into the car showroom? So let's talk about the car dealers over here. Let's try to understand the business of the car dealers. Okay. So what car dealers do? They procure inventory from the car manufacturers. Car manufacturers are there. A lot of car manufacturers are there, right? Some of the popular car manufacturers are like Maruti, Kia, Hyundai, and many people are there, Toyota and so on. Lot many car manufacturers are there. So they are producers. They produce the cars. But who does the business? They don't do the business directly with the clients. These producers are more of a long-term players. They're long-term players. Their job is to produce cars. But who comes in between? The dealers, car dealers. Car dealers. They are the one who runs the actual business. They have the interface, direct interface with the retail traders, retail clients. Okay. So what their job? They will get a lot of inventory and then they will pile up inventory and they will probably put that in their showrooms and then they showcase it. They sell it to the retails. Retail traders come and visit the car dealers and here they are that seller. He is a wholesale seller over here, and retail trader is always going to be a buyer over here. Okay, buyer over here. So they acquire in large scale and they will sell it to individual retail customers. That's what the car dealer does. They are short-term traders. They take order from the retail clients. They go to the car manufacturer. They purchase it at lower price and then they will sell it to the retail price. They will sell it at the retail price. That's how they make the money over here. Do they hold the cars for a longer period? Of course not. Probably they hold the inventory for 7 days or 10 days in their garage. After that, what? After that, they will find a retail and then they will sell it to the retail. That is what generally happens, right? Whereas these players, whether the car is selling or not, they will produce cars and they will keep on holding the inventory for a longer period. They don't bother about that. But these car dealers, for them, moving the inventory is going to be a bigger task over there. Same thing happens in the markets also. Same thing in the markets. We have short-term traders who are mostly short-term wholesale dealers. They buy in wholesale and they'll sell it to retail. That behavior, knowing that behavior is more important if you are trying to learn the market profile. All right. Are you clear? If you're clear, you just type clear so that I can move on to the next topic. All right, great. So a lot of response here. Brilliant. So, of course, what I'm going to do now is I'm going to demonstrate how the point of control, the center point, how it is going to get formed and how you can identify those points. It is very simple. What I'm going to do now is I'm going to simulate the market activity here. Let me bring Ninja Trader. So Ninja Trader has a feature called Control Center. From the Control Center, I can connect to any data sets and I can disconnect. I can move on to the playback connection. I'm going to move a playback connection like kind of I'm going to run the simulation mode. I'm going to show you the last Friday's activity. So let me go and show you the last Friday's activity over here. So let it get settled down. So a lot of lines are here. Anyways. So just give me a second. It's gonna take a little bit of time here. And then we're gonna get the access to the data. Because a huge data set is getting loaded in my case. Probably if I close all the tabs, right, it would have been loading faster, but because of huge data sets to load, it is taking a little bit of time here. So what I am going to simulate here is that I'm going to simulate the last Friday's activity, that is 18th activity. I'm going to explain what you could understand from those, probably how you can understand the markets much better, how the point of control forms, and what is the importance of those point of control. That is what I'm going to explain here. Of course, it's still not coming up. Let me do one thing. I'll close the setup and I'll initiate fresh because it's been running for almost last 3 days. I haven't closed yet. So let me pull up Ninja here. So along with that, my data manager Nimble Data also opens up. Let me click on continue. So automatically it got connected and my charts get loaded immediately. Let me do one thing here. One of my next tab is highly memory consuming tab. Let me close that. Okay, anyways, in the meantime, let me tell you a couple of important concepts that you need to remember. Okay. So traders focus, most of the traders, they focus on two important concepts over here. One is early morning high, early morning high, and early morning low. Second one is like they will be also focusing on previous day high and previous day low, previous day high and previous day low as well. This early morning high and early morning low is the most important one. This is nothing but the first 30-minute high and low. First 30-minute high and low. This is what most of the traders they will be focusing on. The moment market opens and does some activity, they know that early morning high and low has been formed. Market will be always doing some activity, like maybe it might be doing a lot of whipsaws and then it establishes the highs and lows. First 30 minutes, which is nothing but letter A period high and A period low, A period low, A period high and A period low. And that is more important while looking into the auction, how the auction is happening in the markets, whether upside the auction is happening or downside the auction is happening. Now coming back to the topic here, let me go back to the charts. Of course, we are able to get the charts as well. Let me close and open other complex tabs. So a lot of things. Let me close it so that my tool gets lightweight. And now what I'm going to do, I'm going to simulate the last Friday's activity. I'm going to disconnect the data. I'm going to the playback connection. And now it should be coming in. Almost it came here. What I'm going to do here is I'm going to go and do the playback of last Friday's activity. I'll go and select the last Friday's activity. I'll click on play. So you should be able to see the activity from 10:30 onwards. So it is calculating. Any minute you should be able to see the charts. Yeah. So this is what probably around 10:30. This is what the snapshot of the market looks like. What we can understand from here is that the market opened here. So this is where the market opened, right? This is where market opened. You see a small letter O over here that represents today's open. And you can also see a small hash symbol over here. That hash symbol represents, it tracks the current market activity. When the market is moving up and down, you see that the hash symbol automatically moves up and down. So maybe I'll zoom it a little bit and then I'll show you. Oops. I'll zoom a little bit. You can see the hash very clearly by now. So let me run the auction here. I'm going to play back the markets. I'm going to run at a 1x speed, means at the market speed, I'm going to run it. So you should be able to see that the small, it is ticking up and down. It is ticking up and down here. Okay. So largely it is not moving much, but it's a small, tiny fluctuation is what you are seeing at this point of time. What had happened here is that immediately the B period took down the previous day low, and it is trying to generate a horizontal activity over here. Now at this point of time, I know only one thing over here. Price had broken the day low, right? And what else is getting happen? I'm able to get something called ABC balancing. So this is kind of an horizontal activity is getting built over here. At this point of time, if I try to measure the point of control, right, here is what the 3 times activity is getting developed. So 3 times the activity is getting developed and the auction is getting lower. Price went up and auction is getting developing lower. Letter A, letter B. So auction is developing lower. C also went inside. So you see that it just keep on forming what? Consecutive lower highs. When that is going to get broken, very faster it's going to get broken. That is where we can confirm that more or less very near to that, the auction is forming a point of control around those levels. So let me speed up the auction here. I'm just going to run it at 10 times speed. Okay. Imagine time here you can see the time 10:33 exactly around here. You can see the timings over here. So means letter C period is running from 10:15 to 10:45 is what is going to run. So another 10 minutes, the C period is going to come to an end and D period is going to start. So 10:37 here. Maybe I'll do one thing. I'll even increase the speed of the price action. I'll even go to 20 times speed. So right now we are at 20 times speed here. Time is 10:40. So notice here, so far only two-way option process. Horizontal activity is developing. At this point of time, we can have a hunch that more and more price action can happen around those levels. But once the one time framing is broken, so you see that the one time framing, it has been broken by now. Let me pass the activity here. What I want to show here is that maybe you can look into this action, the split profile. Look at the split profile over here. That one time framing, that is like the higher high and then lower high and then again a lower high. That sliding pattern has been broken at D period. D period had broken the C period high. That means we call this an one time framing had come to an end. Now this is the place where you can see more and more trading activity is likely to happen around those levels. Maybe another 4 times or 5 times or 6 times price can whipsaw around these levels. On a daily basis, this happens whenever that one time framing is coming to an end. Let me run the activity here. I'm going to run at 50 times speed so that we can able to visualize the price action very faster. Could see that the auction is getting built up. Horizontal activity is taking place. And that is the place wholesale traders are interested in purchasing in the markets. The wholesale traders like to do some business, and they are doing business on that particular day almost 8 times. Price traded last Friday, but you have a fair idea. You know that more and more time is going to get spent over here. See that letter D is also, E is also getting joined now. Look at that zone. More and more time is also getting spent over here. More and more time is getting spent. And on top of that, price is shooting away from the center point. But you know that as a trader, right? You know that if you're regularly watching market profile, there are fair chances are there that price can again come back to 13,720 levels. Again, 10:45 is going to happen. Letter E is going to become letter F. Letter F also started trading around those levels. Ain't that cool? And that's a simple thing, but that brings a briefer idea about how you have to position yourself. Now, if you know the simple information, probably what you could have done that. Imagine that multiple times price would have been traded around those levels. Then what you could have done that? Maybe you could have waited for a trade, or maybe you could have done something better. Maybe you would have thought better about the markets. So market profile is all about thinking better about the markets, trying to understand the competition, what wholesale traders are doing, what retail traders are doing, what intraday traders are doing. So you will be taking a collective picture about the markets. So how many times letter got traded by now? It got traded almost 6-7 times here. Imagine the block. How many times it got traded? This block, 7 times it got traded. This is the block, again 7 times got traded. Ain't that a bigger deal? Or at least you know that you can go back outside and then you can come back later on when the trend is evolving. But at the same time, you know that a lot of emotional sellers also coming and playing. And that is more of this is what the way the letter A and B, the price is dropping. This is mostly done by traders who are dumping their shares. At the same time, emotional traders, they enter into the trade. Many traders, they see the price and they trade the price. Just because 100 points, 50 had dropped, there are many traders who will come and trade the markets. They'll feel like, I'm feeling bearishness. The moment letter A and B is falling down, they get that feeling that this market is going to crash. And many amateur traders, they come and trade in this market repeatedly again and again. Because many traders, they follow the price only. Many traders, they are told like price is king. But of course, price alone not king. Context is the main king over here. Or we can say like this, if price is king, right, then context is the emperor. Or price distribution is the emperor. If you know that price distribution, at least you could have thought better about these markets. All right, you could have waited patiently that let the auction develop and then let me take a call. I know that the markets are going to go sideways around those levels. So that center point is what we're going to call it as what? Point of control. We're going to call this what? Point of control. Let me pause the activity here. I just want to show how the distribution happens in the market. So that is how the price distribution gets cultivated over here. Center point, you'll be seeing more number of letters. However, if you see at the top, very few letters. At the bottom, very few letters. Develops horizontally. I'm not talking about vertically. I'm talking about horizontal price action. So far, many traders are interested only in this kind of vertical price action. But what I am talking here is when you are looking into the market profile, you focus more on the horizontal price action as well. Like where the price is getting distributed most of the times. And that is more crucial from a short-term trading perspective or from a very, very intraday trading perspective. That is more crucial information. All right. So what we got here? What we got here is an kind of a point of control activity. It's a point of control based activity. That point of control is a center point where more business happens, more trading happens. Why more trading happens? Because that is where the bigger traders are interested around those levels. Small traders are not doing business here. Bigger traders are doing business here. That is why you are able to see the bigger volume also around those levels. At the highs and lows, very lesser volumes are happening. However, at the center point, more volumes are happening. And this is a repeatable nature. Most of the time in the markets, you are going to encounter this kind of patterns. And yes, you can also convert these into trading ideas as well. All right, let's get into some of the basics over here. Okay. So this is how the activity develops. I had given a demonstration of letter A, letter B, C, and D, and E, F, G, H. Every half an hour, I had drawn that letters. And over a period of time, you can see that the pattern is developing the distribution pattern. Right. So probably you will be able to sense at the letter C itself. But more and more letter D, letter E, it confirms the price activity. And over a period of time, it distributes what? It generates a what? It generates a market profile. I hope you are able to follow me, like what I'm trying to say here. And that is the basic foundation block. Okay, so this is the basic foundation about the market understanding. Of course, you know that, right? It is not going to generate any signals, but definitely it gives a lot of information about the markets. That information is what we call as a market understanding. Likewise, there are a lot of information market profile generates. This is one such information. This is one such basic information. Every market profile trader, they know that. However, still there are many beginner level traders. What they will be focusing is like where to enter, where to keep a stop loss, how to use market profile to keep a stop loss. Yes, market profile also says that. But the basic understanding is what? The basic understanding is try to understand the market behavior itself. So this is how market works. This is a very basic funda that every trader has to know about that. Then only you can take your market profile to the next level of your career. Then only you can think better in the markets. If you start seeing market profile as a buy-sell tool, definitely it's not going to happen. Definitely if you are looking into market profile to where to enter, where to exit, it is not going to happen. But it will happen only if you start thinking in a proper manner. All right. So that is what we are going to do here. We are doing an kind of complete 1.5 months of session. We are doing kind of a live mentoring that we are doing for our students. Mostly like 94 hours of course content we are providing. All these are live webinars. Of course, you'll be getting access to the recorded webinars as well. You can go and check out those details at optionhydra.com. It is basically for the traders who want to know more about market profile and the traders who also want to know more about option trading as well. How we can combine option trading with market profile. It is what it is taught in this program. Completely a real-time analysis, not much of a post-mortem. more of a real-time analysis, real-time study, real-time mentoring. That is what you'll be getting in the Option Hydra platform. What you can get here is an institutional grade technical analysis program. Probably I can guarantee you a real market understanding, what a trader should know about when you're opting trading as your career in the long term, and you want to do trading as a career in the long term, then how you should think as a trader, right? That is a skill you will be learning here in the Option Hydra platform. So if in case if you are interested, you can go back and check out the complete topics, that what is covered, what is what, right? You can go back and check out the entire tutorials over here. All right. If in case if you have any questions, you can go and check out the chat section as well. Our team is there to help you on that. Now, coming back to the basics here, let me tell you, like we also compared the 30-minute profile charts with the 30-minute candlestick, which is nothing but it is just a price action. But what candlestick provides is that it provides lesser information about the markets. But market profile, the price distribution structures, it talks a lot about the traders' behavior, traders' emotions, how traders are behaving in the markets. Those behaviors are very repeatable in nature. This is also a pattern, but this is a pattern most likely based upon the trader's behavior, that too from an intraday perspective. Or from a very, very short term perspective, you'll be able to figure out the price action over here. And we can also compare the profile structure with the normal distribution curve. So in a normal distribution curve, probably you would have learned this in a high school mathematics. So in a normal distribution, what you'll be having in the center, you'll be having a mean, right? Probably I think I might be tickling your old memories of your schools where you would have learned mean, you would have learned that standard deviation, that plus or minus one standard deviation that contributes to 68% of the area, right? 68.2% of the area. It's the same thing, the same concept that we here also we are using the same concept over here. Instead, we are using a block here called value area. This value area contributes to 70% of the total TPOs got traded. Let's say each and every letters we call as a TPO. So out of this TPO, from the point of control, we take a one standard deviation here, where 70% of the TPO got traded. Typically, generally people use 68.2 only, but instead we will round it off to 70%, and then we see there's like a plus and minus one standard deviation of the price action. So how it helps? Why we have to take a value area 70%? Why we have to take that 70%? That 70% contributes to the wholesale traders activity. 70% of the business is happening around these level, means most of the big players are interested in trading in these zones. It is a zone, it gives you an idea about the zones where more bigger traders are interested in that. That is 70% of the trading activity. Every day you'll be getting a value area. Every day you'll be getting a value area. Every day you'll be getting a point of control. So we call this as POC, and we call this a value area high and value area low. So these are the couple of terminology you need to know about that. And then we also use a terminology called first 1 hour trading activity. That is letter A and B period, high and low. Put together, we call it as an initial balance, or we call it as IB. IB in a nutshell, we call it as an IB stands for initial balance. Okay, so you learned about what is initial balance, what is the point of control, what is the value area high, and what is the value area low over here. So these are the basic foundations, and each and every letter we call it as what? Time, price, opportunity. Now, all those things put together is what we use market profile to build the market context. So let me tell you what are the things I'll be watching from this context. I'll be watching many things over here. Basically, I'll be looking for a couple of things. When I'm listening to the market profile, what I'll be learning here is that I'll try to understand what kind of traders are in control. Am I dealing with intraday traders or scalpers? Or am I dealing with short-term traders? Or am I dealing with long-term traders? Am I dealing with intermediate swing traders or what? So based upon what I am dealing, I'll try to figure out which direction to trade. Should I have to follow the trend? That means if I am seeing a strong player's activity from the market profile, Then I'll decide which direction to trade. Sometimes if I'm seeing dumb players, if I'm seeing a lot of weaker hands are coming and playing, then I'll try to figure out, should I have to go and trade against them? Then I also try to figure out what is the overall market confidence. Let me tell you, this is the most important thing which is missing in most of the indicators. The indicators will never ever try to explain what is the overall market confidence. So we classify the market confidence into high buyer confidence, high seller confidence. These are strong directional conviction from the traders itself. So we talk about, when I talk about the market confidence, we talk about conviction which is exhibited by the other traders. Conviction. So at times we'll be having a conviction, right? Today definitely the market will go up. Today definitely market will crash. This is individual conviction. But what we will be tracking here is, we will be tracking the overall market's conviction. How as a trader today, how they are driving the price up. Are they really confident in driving the price up, or they are not really confident? So when I say market confidence, I'm talking about the traders as a group. What is the overall confidence exhibited by the market itself? And that again gives a valuable point from the market profile perspective. Sometimes you'll be seeing a no confidence in price action, kind of a dull, boring. Throughout the day, it will be irritating you. How many times you have seen that? You've taken a position and then price never went in your favor also, price never went against your favor also. It keeps on chopping around the day, and then it frustrates the trader. Traders generally feel the frustration. And that frustration we can call as no confidence markets. Now those kind of markets, how I have to deal myself, what I should do in those environments. In a high buyer confidence, how I should position myself. Which direction I have to trade in a high confidence environment. In a low confidence environment, how I should react to the markets. So if you are seeing the weaker hands placing their stop loss, then how you should react. Should you have to wait for some time, allow the weaker hands to play, and then you have to take a decision, or you reach a critical point so that a trend reversal is likely to happen, and you know why it is going to happen. So those kind of things market profile explains. Right? Basically, market profile uses three things over here: price, time, and volume. So price into time is what we call as a price distribution, and volume into time is what we call as a volume distribution. So when I say price into time, right? So like something like this. So here price, a particular price level is getting touched multiple times. So 3 times in a row, it is getting tested 3 times. That is every half an hour once, that letter A, B, C, it's getting touched at that particular level. This is what we call as a price into time. Likewise, you're also seeing volume into time. That volume into time is what we call as a volume distribution or volume profile, and price into time is what we call as a price distribution, or this is what we call as a market profile. Okay, so price into time is what generally less people study, and volume into time is what more people study, because it is now volume into time, right? It is available in most of the broker platforms, TradingView kind of platforms, AmiBroker kind of platforms. So in any kind of platform, if you see volume and time is available. So that is what most of the people are trying to decode. But actually what most of the people have to decode here is that price into time give more information. Price distribution gives better information than volume into time. This will give lesser information. Lesser tradable insights is what it gives you. Lesser tradable insights is what it provides you. All right. So I guess you have a fair idea how you can use market profile. So what I'll be observing from the market is that I'll be observing many things about it. The structure of the profile. What is the structure of the profile? Different structure says different things about the markets. The tempo of the markets, how slow or fast the market is moving. And what is the market confidence? And that is the most important topic called visual reference level. How to use those visual reference levels so that you can predict the markets in a better manner. All those things you'll be able to listen from the market profile charts. So here are the recommended settings for different symbols, right? We have to use different the TPO size. Generally, for something like Nifty or Bank Nifty, I'll be using, for Nifty, I'll be using 20 or 40 as the tick size. That means every 1 point or 2 point, I will be plotting that brick size. Basically, that is what I'll be using majority of the time. Something like Bank Nifty, I'll be using 5 TPOs or 1 TPO is what I'll be generally using. Something like Ashok Leyland or whichever the stock which is trading around 100 rupees to 250 rupees, I'll be plotting every 10 paise, I'll be plotting the letters. So this is not a rule here, but this is the optimal letters from my past experience. I've been following it for quite some time. And yes, that will give you a optimal information about the markets. Now, here are some of the recommended books: Markets in Profile, Profiting from the Auction Process, from the Jim Dalton. He's almost 78 years old now. And he is considered as the modern father of market profile. He's not the inventor. Inventor is from the Mr. Peter Stadelmayer. So both Peter Stadelmayer and Jim Dalton, they worked in UBS as a trader. Then they had even become the CBOT director as well. So they had done a tremendous work behind these markets in profile, especially to understand the behavior of the traders, right? So back in those days, all these players are from back from those flow trading guys. So they know the behavior of the traders. By looking into the flow trading, they had visualized the trading activity, and then they try to figure out how traders behave in the markets. So that is what they had to visualize in the form of markets in profile. Okay, so from the James Dalton's books, you will be able to get tremendous amount of information about how long-term traders behave, how short-term traders behave, right? So you will be getting a lot of idea about how the traders behave in the market. If you are really interested in these kind of topics, right, then these are the 2 books you should start reading. Of course, none of the books will be teaching you strategies, but it will give you a brief idea about how the market itself functions, how traders think, how an investor will think. And that is more important when you are coming into the markets on a daily basis and you want to do some business in the markets and you want to make money out of the markets. Then you need to have the knowledge about how the market itself functions. Without that, you know what will happen. All right. Anyways, let me stop the session here. It's already time is like 9:30. So let me stop the session here. Probably next week, we're going to have one more topic on market profile. So where I'm going to explain about some of the strategies like which you can practice or which I've been practicing. I'll be explaining in the next week. See you soon in the next week. And thanks for coming and listening by. Have a wonderful day. Thank you.